Hello, it's Forex News provided to you by InstaForex News team and me, Kate Stichina. The recovery of the German economy has been continuing in the third quarter in accordance with forecasts, though its rates probably would slow because the consumer spending suffered from uncertainty concerning labor market and profit expectation. The German Ministry of Finance has announced about it. In the monthly report of the ministry, published in November, is said the private consumption has a regulating effect on the economy in the first half of the year, probably is now declining. This is most likely will be one more reason for growth rate reduction in the fourth quarter of the year. According to the data of the Federal Statistical Office published last week, the real gross domestic product of Germany has grown by 0.7% in the third quarter in comparison with the previous quarter, whereas in the second quarter it increased by 0.3%. Before that, the GDP of the largest European economy was decreasing within 4 quarters in succession. In accordance with the government forecast presented last week, the GDP in total will decline by 5% this year and in 2010 will grow by 1.2%. The private consumption, which accounts for more than half of the German GDP, probably will be declining. The situation at the labor market can worsen if the economy does not start to grow promptly, and the support program for employers who are working short day, which helped a lot of people to hold positions of employment. The consumer prices probably will continue to advance by degrees, and the ministry repeated that there is no deflation tendency in Germany, because the recent data about low inflation are basically the result of the basic effect caused by the high energy costs last year. The reduction on the economy hit tax revenues in all countries, announced the ministry, though the volume of the assets which were not received is declining. The tax revenues in the country has in total decreased by 4.5% in October to 32.9 billion euro in comparison with the same period of the last year, whereas in September the tax revenues lowered by 7.4%. The income tax funds also has fell, because its receipt dropped by 3.4% in October. For the first 10 months of the present year, the tax revenues in Germany declined by 5.8% in comparison with the same period of the previous year, whereas the federal tax receipts reduced by 4.3%. It was Forex News provided to you by InstaForex News team and me, Kate Stichina. Goodbye.